Between May 2020 and December 2021, I have secured $8,121,009.35 in legitimate funding for Black and minority-owned businesses. My name is Taliba Bales, and I'm the host of the Black Bankable Podcast. Effective immediately, I am coming for more for the community. Hello, y'all. This is Taliba with the Black Bankable CEO Podcast. I am back for another episode, and I first want to thank each and every one of you for viewing the prior episodes. If you hadn't checked them out, please make sure that you go to episodes 1 and 2. This is now episode 3. I'm extremely excited and on a roll, very motivated by those of you who are checking in with me. So please make sure that you subscribe to this podcast because we are in this with you and your Black-owned business for the long run. So if you hadn't already noticed a pattern, every Thursday is when I am airing a new episode. Now, I also do some training content videos that I may sprinkle in here or there. And certainly when I'm interviewing on other podcasts, or if I'm showing up somewhere else in the public, I may sprinkle a little bit of that magic here on the podcast channel. But for the most part, this podcast is dedicated to getting your Black business bankable. Now, before we hop into me challenging you yet again, asking you, are you really a boss yet again? I want us to dive into what the word bankable means for you. I want to invite you to check us out on our social media channels, on my business's webpage, all of which the links are going to be right underneath this podcast so that you can see how we are on the front lines with Black business owners in various financial aspects. But when we think of the word bankable, the first thing that I want to know is what financial challenge are you currently experiencing when it comes to not being able to get funding, when it comes to perhaps you were denied for a loan because you did not have your financial statements or the financial statements weren't accurate? Perhaps you just simply took yourself out of the game because you knew that you had to have a couple of tax years caught up, right? Before you could, or you had to get your tax life in order. Or is it just that those aren't those challenges for you, but you are profitable, you have a tax bill, you're trying to identify strategic ways, and that's called tax planning, to take you and your employees and your business to the next level, perhaps a self-employed 401k or some other strategy of that nature. Those are all things that I define as bankable, that I define as unlocking any challenge, and that could also be access to information. Any challenge that you are currently experiencing that's preventing you from getting to your best life in your business, that's preventing you from making that $1 million mark or $2 million mark or $100,000 mark, whatever mark you have written down as a financial goal for your business. If there is something in the way of that business that has to do with taxes, that has to do with bookkeeping, that has to do with tax planning, that has to do with loans, then that's why you're here. That's why this Black Bankable podcast has been created. That's why I'm in front of you. So I wanted to make sure that you know, because you're listening, this is what you're getting. This is what you're subscribing for. This is what you are tuning in. And like I've said in the prior episodes, there is no fluff here. Okay, I've been doing this thing for 15 years with Black business owners, and my mom, my whole life. I have a team of folks combined. We probably got about 100 years experience in dealing with numbers. So when I'm coming to you and I'm talking to you about something that has affected your Black business, trust and believe we've seen it. Trust and believe we've overcome it, and we have gotten businesses exactly where they need to be. They have become bankable. So I wanted you to know that so that you can understand where I'm coming from when I'm challenging you today. Because today, if you hadn't seen that title of this episode, I'm challenging you by saying, are you really the boss that you think that you are? Are you really the boss that you think that you are? Okay. And this is going to be rooted in, of course, and always, IRS guidelines. Anything that I'm coming at you like that on, I'm not only going to challenge you, maybe make you a little bit uncomfortable, but then I'm going to give you the tools that you need to just go ahead and set that anxiety behind, that uncomfort behind, and get to this money. Okay. Get your business where it needs to be. All right. So what we're talking about today is really and truly, are you running a business, or is the IRS going to hit you with the hobbyist? Like, nah, you're not a boss. You're not a boss. And we need you to prove it, because otherwise we're going to deem this operation that you're calling really and truly a hobby. Now, the guidelines that I'm going to go over, these are guidelines that have been around for forever, and certainly pre-pandemic. Okay, let me say that. These guidelines have been around pre-pandemic. However, what I want us, when you're listening to these things, or you're writing down these guidelines that I'm about to go on, that you're going to check in on in your business to make sure that you're the boss that you say that you are, really, I want you to look at these things as pieces of your foundation that you need to make sure you have in place. I'll address them from the context of these are things the IRS will be looking for. And under the context, as if you received a letter from the IRS saying, I need for you to prove to me that you're a boss and not a hobbyist. However, we're getting ourselves together using these guidelines so that, number one, even if a letter were to come, we're already ready. But these are going to be foundational pieces that you need to be aware of. And I'm sure that you've heard before, but you're going to hear it again. And then we're going to give you the tools to make sure that you are effectively executing this foundational piece so that you have no problems, so that you know that you're a boss. So are you ready? We got a couple of things to go over. So again, the key terms that we're starting out with, as I said before, I want you to write down business, and then I want you to write down hobby. Business or hobby, boss or hobbyist somewhere, okay? Now, the IRS has these two categories, and they distinguish between the two because it has to do directly with how your business will be able to file taxes. So you see, I'm not just, checking you on whether or not you're a boss for absolutely no reason. Of course, this has to do with how you are going to be able to file taxes, how the IRS will accept your business's performance. And remember, we talked about those tax forms that you file in the prior episodes. So let's break this down. Business or hobby. So the IRS says that you are legitimately in business, right? You are legitimately in business, okay, when you intend to make a profit. And of course, most of us, I don't know anybody that starts a business that doesn't intend to be profitable. So that's easy, right? It says that if you're a legitimate business, you intend to be profitable, then you can deduct when your business is profitable and when your business is not profitable, to the point that it's not profitable. And we talked about an unprofitable business that may have experienced a loss, right, greater than the money that they brought in. So we talked about that negative tax return. So when the IRS says you're a business, you can have the negative tax return. There's no question, because we got your paperwork in order. So if there's ever a question, you have everything we need to prove if there's a question. However, that hobby word, the hobby word on the other side. Now, if there is a question about whether or not you're a boss or whether or not you're just really doing a hobby, what happens from a tax perspective is if you're considered a hobby, you can only reduce your income by that amount. So if you made 5,000 and your expenses are 10,000, if the IRS says you're a hobby, you're only going to be able to deduct 5,000. You can only reduce your income by the amount that you made in your expenses. Okay, let's keep going. All right. So I want you to also write down the word disallow. Because remember when I gave you that example of if you're a hobbyist, you can't have, so in essence, you can't have that negative tax return. The formal word for that is disallow, meaning the opposite of allow. The IRS is going to say, well, we don't believe that you're actually trying to have a profit. You didn't get into this thing to be profitable. So we're going to disallow you being able to write off your expenses at a certain amount. And so that's what that 5,000 case study that I just mentioned means is if you're a hobby, you can't have a negative tax. Now you'll have a zero tax return. And so you may be saying, well, at least I'm able to write off something, right? But in my mind, that's leaving money on the table, because if you're in it for the personal profit, and because life happens or because the reality of the pandemic happens, anything happens, your business is actually not profitable, and you had those $10,000 in expenses, well, you want to be able to claim the $10,000 that you spent, which would then have you having a non-profitable business. And when you file that with your taxes, that could have other benefits in your overall tax package, especially if you are filing a Schedule C, or if you are filing, remember, we talked about an 1120S as an S Corp in the prior episode. And if you really and truly had a $10,000 level of expenses and only $5,000 brought in, you want to be able to bring that $5,000 loss into your personal tax packet, because that could help reduce the tax bill as it relates to the overall scope of your household taxes. So you see why it's important that you get that paper out and that you write down these guidelines that the IRS is going to be looking for to determine whether or not you're a business or a hobby. Because if it's a hobby, you're going to be leaving money on the table because you're not going to be able to have that negative tax return. A portion of your expenses are going to be disallowed if you're a hobbyist, if you're deemed a hobbyist and not a boss. Okay. All right. Now, before we get into those guidelines, and this is where I want to give you some context to let you know that these guidelines have been around for some time, certainly pre-pandemic. So, but I do want you to know that there is a test. This test of whether or not you are considered a hobbyist or a boss, it's called the 3 out of 5 test. Okay. It's not just one tax year and the IRS is looking at it and you have a negative tax return. And then now all of a sudden you're on this huge bulletin board in the IRS lunchroom and everybody's looking at your name, trying to figure out what the heck you're doing. That's not what I'm saying. It is a combination, and it's built on a 3 out of 5 test is what they call. So what that basically means is if you made a profit in any of the 3 out of 5 consecutive years, then it is assumed, the IRS assumes that you're in this thing as a boss. You're in this thing for the intent to have a profit. You have what is called a profit motive, right? And so the 3 out of 5 is 3 profitable years out of 5 total years. Now, I know you're probably already thinking, I have a negative tax return for 10 years. Definitely more than 5 years, and we talked about this in the prior episodes when I mentioned, what I called a learned behavior, right? And I talked about, for some reason or another, in our community, there has been a deep-rooted learned behavior to write everything off. And remember, I said, it's never a judgment zone over here. I understand it. I live in the community. I am part of the community. I get it. I've been in this tax industry for a long time. And folks before me that have passed down this industry to me have been in this business for a while. So I understand it. And so your worry of, well, shoot, I've been writing everything off for forever. Don't be super alarmed, right? But that's why you're here today, for me to just throw some stuff at you from a different angle, for you to add to your list of things, because at the end of the day, this is your business, but so that you can be properly equipped with other options to do something different. Okay. So when we talk about this 3 out of 5 test, 3 profitable years out of 5 total years, and you're like, yeah, you looking at me crazy because you know you've written off stuff way many more years than that. What I want to say to you today is write it down and let's see if that's a learned behavior that we can improve over time. The other factor of the 3 out of 5 test is the reality that we're in a pandemic. Okay. And so, I mean, come on. I don't foresee the IRS sending very many of these challenge letters out. In fact, we know the IRS has actually stopped sending a slew of letters just because they're behind on processing stuff. And that's a whole nother conversation. Do I think that you're going to get a letter on this and we've been in the pandemic for 2 years? No. Do I work for the IRS? No. I mean, I definitely not making the decisions, but just on logic. That's not what we're talking about here. Remember, we're giving you these guidelines so that you can use them as foundational pieces to be bulletproof from the jump. Should you ever get a letter, you're bulletproof because you've written down these things. So because it's been a pandemic, there's certainly an assumption that a lot of businesses have taken a loss. Okay. But you just need to know that there is this 3 out of 5 test. It's not, calling you a hobbyist to your face. It's not something that happens just in 1 year tax review. Is the point. So are y'all ready? Okay. Y'all know me, whenever I'm looking away, I got to have my notes because I'll go off script because I love talking and communicating to y'all. I get so passionate about this stuff and my folks tell me I need to make sure I have my notes. So when I'm looking away, I'm not ashamed to say, oh, this stuff is not in my head. So y'all want to make sure I'm looking at these notes too. So number 1, what's the number 1 thing that I want you to write down when it comes to me challenging you, saying, are you a boss or are you just playing? Are you a hobbyist somewhere? And number 1 is, do you have thorough and business-like books? The IRS is saying, do you have thorough and business-like books? Their exact wording, not mine. But let me translate that for you. What that means is really bookkeeping. Do you have a system in place in which you are efficiently tracking your income and your expenses? That's what thorough and business-like books mean. Now, in the prior episodes, we talked about that. Okay, we talked about anything from a range of you having an Excel spreadsheet, because I know it's some Excel masters out there, you know what I mean, on making Excel work for you. And remember, I said if your learned behavior works in which you are making sure that Excel spreadsheet is up to date, it's up to date. If you know how to make sure that that's going to produce the financial statements you need, I'm going to clap for you. Not even, I'm not going to bother you on that Excel spreadsheet too much, because at least you have that. Now, of course, I want to hold your hand and get you somewhere else. But if you have that, that's thorough and business-like books. Okay. You also know that we talked about cloud-based accounting. I'm a QuickBooks Pro Advisor and a QuickBooks solutions provider, which means I resell QuickBooks stuff. So I'm a little biased, but I'm the plug to QuickBooks, okay? When it comes to getting you in there and knowing how to work QuickBooks, I just am. So of course, I'm going to say that, that QuickBooks, having a cloud-based software like QuickBooks is definitely thorough business like books. There's also Wave. I mean, you got a number of different ways in which you can have thorough and business-like books. So just have it. That's number one. All right. Now, number two. Now, this is not just me, because you may say, girl, you said that in the second episode, and I hear that, and I know you've heard it somewhere else. But this is not made up stuff. The second test, the second thing that the IRS looks at before it calls you a hobbyist to your face and not a boss is, do you have separate business and personal accounts? You could go to irs.gov. I promise you'll find it there, right? And you've heard this before because I talked about it, in several different ways in the prior episodes. But this is back. The IRS says you're not really a boss if you don't have a separate business checking account. So what did we say last time as it relates to the things that you need to have in order to have a business checking account? So we said one of the things, and I know y'all probably want to fight me when it comes to having a legal business entity structure, but you know how I feel about that. You know that my recommendation to you is going to be that at the very least, you have a single member LLC, that you're not a sole proprietor. And I'm going to do an entire episode on what the heck this means, because I know that we have a lot of 1099 gig workers out there, and I want to help y'all get to the bag too, right? But I digress, right? The point of the matter is, in order for you to use this as a foundational piece so that nobody's calling you a hobbyist to your face, they're calling you a boss, is you have to have a separate business checking account. So that means you have to have a legal entity in place so that you can get an EIN. You can have the articles that you filed, with your local state, Secretary of State, courthouse, however you do it in your state. And then you can go to a bank and get a business checking account. Right? So those are the things that you're going to need. And for the most part, it fluctuates just a tad with some banks, but most banks at the very least are going to be asking you for your business's EIN, which links to actually having a legal entity structure, as well as the actual paperwork that you filed with your state in order to become a business, to get a business bank account. And if you found another way to do something, let me know. There are other ways, but we're not talking about that right now, because QuickBooks actually has, fintech is coming, is changing the game. QuickBooks actually has what's called QuickBooks Cash, but again, that's available in a QuickBooks account, which is still a business account that links to your business checking account. So y'all, let me know. Let me know. Prove me wrong. Prove me wrong. Put it under the comments. If you have been able to get a business checking account without these things I just mentioned, and I'll share it. No problem at all. Okay. The third thing that the IRS looks at before it calls you a hobbyist to your face and not a boss. Number 3 is, do you have separate credit cards from your business and your personal? So it's just a follow-up, an add-on, a pile-on, however you want to think about it, to number 2. So the theme is, are you separating these things? Remember, we talked about we don't want to be commingling these things, because the point of us getting you bankable and talking about these things is to get you into a long-term solution in which you're able to get financing. And when we pair you with a bank, that's ready to give you financing. In fact, we're not even going to pair you if you have all this stuff commingled, because that says you're not ready to be paired with one of our funding partners yet. And so if you have the goal, if you've written down that you want to get funding, whether it's from a bank, a traditional bank or a non-traditional bank, and they ask you for bank statements, you can see, trust me. This is something that I am completely challenging you to do, and we'll continue to talk about it. And I might even invite some of my funding partners on for you to hear it from them as to the things that they are looking for. In fact, I know I'm going to do that. Now, one of the benefits of keeping and starting to get everything separate, and I know that y'all have heard about business credit, right? So that's a bonus, right? So that's an incentive. So an incentive in getting everything separate, personal, separate from business, is now you can work on building business credit for your business, because you have your personal side, which is using your social security number, and then you have your business side, which is using your EIN. So when the IRS has challenged you with number 3 and saying, do you have separate credit cards, or, separate from personal to business, then your answer is yes, because you have started to separate those things and you have started to build business credit. And of course, we do those things as well. In fact, we have partnered with Divvy to get our business owners into a business credit card line of credit. All right. Now, what's the fourth one? The fourth challenge, and this is almost like a repeat, right, of number 1, but it has a little bit of a little more language to it that I want to dive into. So the IRS exact wording is that you have a logbook to keep records of your business and your personal use of items, such as if you have, computers, or if you have boats, cars, equipment, computers. Do you have a logbook that separates the business from the personal and just tracks when you purchased it? Do you, in essence, if I were to be the government whisperer that I think I am on this, this translates into, are you keeping your personal assets separate from your business assets? Remember, we talked about that in episode 2. When, and I just briefly talked about it when I said that, and it probably was still under the same context of separating stuff out, that you very much want to have assets that are listed in your business's name, because that also goes a long way in you being able to leverage those assets for funding down the line, of course, to reflect those things on your balance sheet, all of that fun stuff. So when we revisit number 4, and the IRS is saying, well, do you have a logbook to keep records of, the things that you purchase on the business side and on the personal side? Well, you already have it now, because that still goes into how you're starting to separate out things from your personal, from your business. And remember, the whole point of this is to give you the foundation so that nobody, and certainly not the IRS, is able to call you a hobbyist to your face when you're walking around here believing that you are a boss. All right. So what's number 5? Now, number 5, especially if you've been in your business for some time, you probably are just going to laugh at this one, because you got this covered. So number 5 is the time and effort that you put into this activity that you're calling a business, and the time and effort that you're putting into it specifically to make sure that it is in fact profitable. Okay, that it is in fact profitable, the time and effort. Now, like I said, if you've been in your business for a while, and even if you're aspiring to be a business, time and effort, when you're 100% boss, it starts blurring together because, especially if you're just one like me where it's, you're almost working on it 24/7 just because you're so motivated and all of that fun stuff, and so time and effort, that's the easy one. Right. Because you're like, oh, of course, I'm waking up and I'm doing these things. I'm calling these folks. I'm making sure my CRM is together. I'm posting on social media. I am joining different associations and networking with folks. That all counts as the time and effort that you're putting into your activity in order to make it profitable. So that's an easy one. And that was number 5. So let's look at number 6. So the number 6 thing that the IRS looks at to determine if it's going to be able to call you a hobbyist to your face is your losses. So particularly, are the losses that your business has it incurred, is it something that was out of your control? And this goes back to the whole thing of whether or not you're really in this to make a profit and the time and effort, or is it just, that you're not doing anything to make it profitable. So again, to refocus, number 6 says, are the losses that your business, your activity has experienced, is it due to circumstances that are out of your control? Now, if you're a startup, there are normal startup costs. There's a normal solid 1 to 2, 3 years that you may be spending more, right, than you're getting in. That's normal. Okay. Those are actually, things that just comes along with it. They're out of your control. If you want to make money, you got to spend money. But when you're not a startup and you have been in business for some time, I would say over 3 years, and you are experiencing losses like we talked about before. Now, I do want to use this particular one to drill in a little bit, because I'm pretty sure someone's almost ready to say, well, yeah, I actually do have bona fide losses. And every time that I had a negative tax return, it was for real, Taliba. Like, I'm not making these things up. And so let me just rewind and back and let you know that, and I understand that. Right? We are totally having a conversation that these are losses that you actually experienced. And I'm not saying you're making anything up, right? But under the context of what your tax returns need to reflect, when you tell me that you're trying to get to the money, when you tell me that you're trying to, get a home, when you tell me that you're trying to get some type of loan or a line of credit or a credit card, that's when we have the conversation, which is really strategy. That's when we have the strategy conversation about how we write those off. So I did want to add that in there, especially since we're talking about, losses. So make sure that you understand that that's the context of what we're talking about here when it's losses, not that we have, anybody making anything up, because we're past that. That's not what we're talking about here. Okay. Number 7, and then we have one more to go. All right. But number 7 is, so you had those losses, right? You had those losses that were out of your control. Now the IRS wants to say, so what'd you do about it? Right? Their exact wording is that they want to see a show of any change in operations that you have made in an attempt to make that profit. So let's talk about that. Remember, you challenged me. You said that I actually have valid losses. I spent $10,000 and I only made $5,000. And so my tax return needs to reflect that. Okay. We're going with that. What the IRS wants to do and what I want to challenge you. And this is where the true tools in growing your business have to come into play. This is where the Bankable CEO coaching program and what we do with businesses comes into play. And when you start seeing results, this is where strategy comes into play. Because you come to me and you say, I got a negative tax return and I'm sticking to it, right? So then now I'm going to say, no problem. How can you get leaner in your expenses then? Can you raise your prices then? You see where I'm going with it? Now we gotta start looking at ways in which we can make sure that the next time you file taxes, it will be your very best effort, at least, to be profitable. And that has to be your circle. You have to be in a circle. You have to be surrounded by individuals that are going to challenge you and stretch you in that area, because we don't want to just continue to keep experiencing a loss. And if you're at that point and you can't really identify, why, or what are some things that I can do, then that's when it's time for you to connect to an expert so that you can start having a year-round conversation about making sure that your business is profitable. We're going to put the best damn effort forward throughout the year so that your business is profitable. Life can happen and it not be profitable, but when you connect yourself to an expert, a coach that is going to be having this conversation with you year round, that goes to number 7 on a show of what you have done to change operations, that's what we're here for. That's what the Black and Bankable podcast is here for, a year-round conversation. Yes, I own a tax firm, but one of the things I always say to my clients and to business owners is, don't start having this conversation just at tax time, because at that point it's too late. It's already happened. If you're serious about having a profitable business, you are going to be having these type of conversations year round. Now, that could be on a monthly basis, that could be on a quarterly basis, but you definitely don't want to wait to tax time, because when it comes to what are the things that you are doing to ensure that the next tax year you've given your best effort to be profitable, well, now that's what we're talking about. That's the challenge that I'm putting out there for you before I call you a boss or a hobbyist. So the very last guideline, number 8, that the IRS will look at when it comes to calling you a hobbyist to your face and you believing that you're a boss. And that is whether or not, as this is always funny, and it allows me to get on my soapbox. I'm going to try to keep it to not being on there though. But the IRS actually says this, number 8, whether or not you or your advisors actually have the knowledge needed to carry on the activity as a successful business. That's definitely a challenge. I just said, are you a boss or a hobbyist? Okay, the IRS number 8 is cutting deep. They're just flat out saying, okay, how about this? So we did 1 through 7. We did 1 through 7. You think you're ready to roll. You're about to send that letter back disputing you being called a hobbyist to your face. And then number 8 comes in and, you're looking at the screen, or you're looking at the piece of paper, because the IRS is challenging you. They're challenging you. They're saying, okay, well, so look, do you actually have the knowledge to do these things that you say you're supposed to be doing to run a profitable business? Let me break that down for you. Because remember, in my government whisperer brain here, what I'm seeing in number 8, they're not asking you if you know how to bake the hell out of some cookies. They're not asking you if you're making the flyest t-shirts. They're not asking you if you are the best at the industry that you chose to start your business in. That's not what number 8 is asking you. Right? Let me read it again. It says, whether or not you or your advisors have the knowledge needed to carry on the activity as a successful business. What are they saying? Bake the hell out of some cookies, but make sure you have some people around you that know how to run a business. You get it? And so that really encompasses everything that we just talked about in this episode. Having all of these 8 foundational pieces into your business makes you a boss. And let me say this, know your lane. I don't know how to bake. I do not know how to bake cookies at all. I burn cookies that's come in the tube. It's not my lane. I don't know how to make I don't make t-shirts. I know how to buy them because somebody designed for. I know my lane. My lane is this. So what I'm saying is, know your lane. And if something that is vital to your business is out of your lane, okay, you need to have somebody in that lane. You have to invest in a coach, an expert. Maybe you have to outsource something. Know your lane, play it well. Make sure that your team consists of an expert in the lanes needed for your business to be successful. That's what number 8 is saying. Right? Because you, as the owner of your business that has chosen to start your business in that particular industry, you chose that industry because you got that covered. But so in order for your business to truly be successful, you have to have a team of folks, trusted advisors that know what they're doing behind you, holding up their lanes, right? Holding up their lanes, playing the hell out of their lanes to make an overall picture of a successful business. So that's it. That is the episode. Again, you have 8 pieces. Watch this again if you missed it. Watch it again if you missed it. Because these 8 things that the IRS can look at and say, they call you a hobbyist to your face and you sitting around here thinking that you're a boss, use these things, use them now, implement them now, because they will make you a successful Black business. Paying close attention to each of these 8 things will make you a Black and bankable business. Talk to me, y'all. Let me know in the comments what you feel about these guidelines. Subscribe, share with your business bestie. Let me know what else you want me to talk about. Again, we're dropping every Thursday. We'll sprinkle in some extra content. Thank you so much for listening in, watching me on this episode. Thank you again. Bye.